you can see that our price right now on SPY, we are down $2.91. And you can see this red candle. Now, this is a great way, as I'm giving you an explanation right now, of how this one indicator can make you an expert on identifying on any time frame if we're bullish or bearish.
Welcome back, traders. This is Sandra with Trading Made Simple.
Hello, hope you guys are having a great day. Oh, what is happening in the marketplace today? As you can see on a day chart, right, where we currently have a red candle. We had a red candle yesterday as well. And so as you can see, whenever we get too far above, or on the flip side, if we get too far below that 20, to me, we always have to come down and touch it. It's just the way that price action works. And watch if I go back in time here, you could see how the trend is going up. You could see that 20 is going up, and you could see price just following along with it, right? And it's above it. And when price is above it, we're bullish. When price is below it, we're bearish. It's a very easy way to just look at the chart and immediately identify if we're bullish or bearish. And that would be for any time frame. As an example, right now we're on a day chart, but if I put this on a 1 hour chart, you could see that we've been above it. Let me go back a couple days here. We were above it, we came below it, dropped way down, right? Came back above it, and you could see how we're just following suit. And so whenever, and right now, by the way, we broke yesterday. Now, no one can forecast the market. These indicators are lagging indicators. That's why I like the 20 EMA, because it's a quicker indicator than a simple moving average. And because of that, it moves a little quicker. And so as you can see, as we broke below yesterday, the 1 hour 20 EMA, we are now still below it. And you could see this like pivot trend line that I have, that's a dotted gray line. You could see that we broke below it today. So this really, right, on an hourly, we broke below point of control. And what does that mean, guys? We're getting bearish. Now, can the day chart still be bullish with the 1 hour being bearish? And the answer is yes. We can see it right here. Time is fractal. It's fragmented. Time is fragmented. So in order, and really, when you look, this is a great identifier. When you look at the time frames, you could see you got 1 minute, 5 minute, 15 minute, 30 minute, the hourly that we're on right now, 4 hours, daily, weekly, monthly. And so in order for the 5 minute, if we look at a 1 minute as an example, you could see that we're below the 20 and we're slightly rising. You could see momentum is coming right over to the 0 line. If momentum breaks above that 0 and price breaks above the 20, we could, on a smaller time frame, start to recover from this bearish mood that we're in on the 1 minute. If we check the 5 minute, are we still bearish? The answer is yes. You could see that price is below the 20 EMA. You could see that the momentum indicator is still below the 0 line. Remember that momentum drives price, not the other way around. Momentum drives price. So momentum right now is on the lower end, right? Still below the 0 line. So we have low momentum. We need momentum, right, in either direction to really set the tone. And right now, the tone has been bearish. So that's a 5 minute chart. How about if we go to a 15 minute chart? So now we're going up in the time. I don't say that word right, do I? I don't think I am. It's fragmented. And because time is fragmented in this sense, we're now looking at a 15 minute chart. Are we still below the 20? Yes, we are. That's bearish on a 15. How about on a 30 minute? We're still bearish on a 30 minute. How about a 1 hour? Bearish on a 1 hour. Do you see how this goes, guys? And then we're going through the time periods. Now, on a 4 hour chart, 4 hour, half a day, half a trading day, we're just coming to touch it, aren't we? And typically speaking, we like to touch the 20. I think we do. Now, if you talk to another trader, they're going to have a set of indicators that they like, okay? But I try to make everything as simple as possible. And this is a great way, as I'm giving you an explanation right now, of how this one indicator can make you an expert on identifying on any time frame if we're bullish or bearish. And that basically is the way it goes. Now, if we break below this 20 on a 4-hour, it will start then to affect the daily. Now, the daily is already down, but the daily is still positive. So what is a day chart compared to an hourly or a 5-minute? How does that look? Let me give you a little bit of an analysis here where you can think about this. Do you guys remember Thomas guides? Oh my gosh, I had one of my girlfriends that was actually my partner as a detective. She's retired as well. She came down, had a spa day, but anyway. What was funny was we were talking about Thomas guides. Could you imagine being a fire truck guy or a police officer or any of those types of jobs where you're looking at a Thomas guide, A3, you're looking at this much of a map, right, on the Thomas guide, and then you got to go, okay, got to shut down the book and turn on the lights and try to figure this out. So when I think back about that, the kids today, they just have it so easy. But anyway, I regress. Hey traders, if you're finding this helpful, go ahead and tap that like and subscribe. We drop fresh trading setups and automation tips every day. And trust me, what's coming up next could level up your game. The links to learn more about us and our system is in the description below. As we go back to the Thomas guide, if you look at the Thomas guide and you look at one square, right? Looking at that one square is probably like a day chart. So you can see all the streets around it. You can see this little overview. You're like a helicopter. You could see that A2 or A3. You could see the whole square. So you could see a lot of things going on in there. If we were sitting at a stop sign and I could see we're at a 4-way stop, that would be like you were on a 1-minute or a 5-minute chart. You're just looking, just your peripheral view right here. I can see the 4-way stop. That's all I can see. I can't see a mile away, right? And I can't see 10 miles away. And so when you look at fracture time fragments and you start to identify the stock market and what it's doing, what is price action doing right now? Right now, that's a 5-minute and a 1-minute chart. What's it doing right now? But when you start to try to identify price action, to use it as a forecasting tool, isn't that what people are doing when they're looking at a chart? They're looking at this to help them forecast. So when we're looking at forecasting, if you were a day trader, you're looking at a 5-minute chart. If you're a complete beginner, you're looking at a 1-minute, and I would say, get off of that 1-minute chart. Too much noise. It's like you're standing in the street and cars are coming right by you. That's what a 1-minute is. You can't see anything, fight or flight. You can't see anything. You're just standing in the middle of the street and things are happening so quickly. It's a lot of noise. And so as you become more experienced, you're looking at larger time frames. Now, I always say that regardless of how good you are to identify your analysis on a chart, okay, that all it takes is one tweet to blow that up. One headline of a virus blows that up. War, interest rates, FOMC, all these events can blow up whatever analysis you got working. So typically speaking, when you're advanced, you're looking at a weekly chart. I want to know what the weekly trend is, right? It's going up. And look at where the 20 is on a weekly chart. It's going straight up. Now, granted, it's not up like this, but it's inclining, right? It's an incline. It's going straight up. You could see, and if you visually, you're drawing this on it's drawing it for you, thankfully. But if you were drawing it, you could see that it's just a slow incline, right? If we look at a daily on SPY, we are looking at Look at all these days. Each candle is one day. Each candle on a day chart, each candle is one day. Look at how we're sloping up. Can this slope up forever? Sure. But at some point, price is going to want to touch. Let me describe it to you in a different way. And I know that you're going to understand this because most of you have been in professions that understand bell curves. So the stock market as well is like a bell curve, okay? And 68% of the time, we are within that bell curve. And then some of the time, we're outside of that. And really, this is all about price movement. So price goes into a range. And so this 20 acts like a bell curve, like it's a reversion to the mean. Price goes outside of it, and then it needs to come back in to touch it. And everything, whether it be, everything pretty much has a reversion. Nothing can just go in a straight line all the time. So the quicker that you identify that, the quicker you will be flexible to identify that the market has ebbs and flows, just like the wave indicator or the CCI.